So pretty important meeting this time around, especially in light of how the global macros have taken the turn in the last 72 hours. Siddharth Sanyal is now joining us, Chief Economist at and Head of Research at Bandhan Bank. Siddharth, afternoon. Thank you so much for your time. I'll come straight to the point. Our RBI governor have been one of the, doesn't mince any words and really talks very straight to all the stakeholders in the market and have been very clear that whatever could be the trajectory of rates globally, we would chart our own path given how our macros are looking. But this time, whatever's happened by BOJ or even the data coming out of US, do you think it could force the hand of or impact the stance of our central bank at any degree or no?
That's a very interesting question. As you rightly pointed out, last 3-4 days, there's all of a sudden there's huge amount of volatility at this moment in the global market. But I don't really think that will immediately lead to any knee-jerk reaction on the part of RBI. While these developments are very important, my sense is that RBI will remain watchful whether these developments eventually lead to some kind of more structural, more permanent in nature, or this is just like a passing phase. So if it turns out to be more structural or permanent in nature, and if it does eventually have or imply more meaningful impact on key macro parameters for our domestic economy, I think RBI will definitely take that into account. But having said that, at this moment, it looks like my expectation, even before this particular policy, and market's expectation also was that of a pause in terms of rates this time. I have a slightly contra view compared to some of the other, my other peers, as well as what the RBI has indicated of late in terms of the stance. I do think that there is merit in thinking about a neutral stance at this moment. But generally, my sense is that the expectation from the market is that there will not be any change in stance also. So my sense is that just because of the heightened uncertainty from the global market, this will not immediately lead to a change in policy action or stance on the part of RBI. Having said that, I would like to take this particular opportunity to highlight one particular aspect. My sense is that this is time for RBI to step up their liquidity infusion in the market. Over the last 1.5, 2 years, RBI had been focusing more in terms of absorbing liquidity, the excess liquidity that was there in the market. They had been absorbing it quite aggressively, I would say. And as a result, if you see the measure of RBI's primary liquidity infusion or reserve money growth had been very, very weak over the course of the last 2 years. My sense is that it's time for them to gradually step up liquidity infusion, and that will lead to a little bit of easing of the liquidity stress off and on the banking system is facing at this moment.
Okay, so that's the view coming in as far as what we should expect from the monetary policy meeting. But I also wanted to get a sense from you, Mr. Sanyal. What do you make of the moves that we are seeing on the 10-year and the rupee weakening to almost the level of 84? Of course, a lot was driven by what was happening across the globe, but do you anticipate any intervention? Do you expect it to head lower? What's the view on the currency and 10-year from here on?
So my sense is that 10-year might actually soften further. Basically, if you see in the Indian context at this moment, while the last print had inched up a bit higher, generally inflation is well anchored. A very important indication has come from the government that the central government is very, very committed to fiscal discipline. They have actually given indication of lowering the overall debt level going ahead. The rating scenario overall seems positive for India. FII flows, particularly in the debt after the index inclusion, is pretty decent. So overall, all these parameters put together, even though I do not expect any rate cut immediately, at some point of time, that discussion will come up a little more, especially given that the expectation about Fed's cut is becoming far stronger in the last few days. So at some point of time, there will be discussions about RBI rate cutting also. So all these factors put together, and not necessarily relying too much on an RBI cut, still I would expect that the rates might actually soften significantly from here on. So that particular aspect is pretty clear. On the currency side, I don't expect too much of weakening of the currency from here on. At this moment, there had been excessive volatility in the global market. Or so many currencies are reacting to that. That is inevitable. But otherwise, fundamentally, India's current account deficit is pretty low at this moment, clearly at sub 1% kind of level. Flows are relatively good. FDI of late had been little somber, but overall BOP surplus is pretty significant. So I do not really expect a rupee to weaken or continue to weaken from here on. My sense is that, in fact, given the positive BOP surplus, you might actually see RBI intervening on the purchase side more often than not over the course of the next few months.
Right.
That might, but overall, I do not expect rupee to weaken.
All right, Siddharth, we'll let you go on that one. Thanks so much for taking time out and chatting with us. So